there's a famous entrepreneur whose lawyer basically threatens to sue us before we even write about this person. It's like, whatever you're writing is going to be bad, so I'm going to sue you. I would actually say fintech and payments are very global and sort of is a category where winning in local markets is really important. And so I actually would say that the biggest drivers in fintech were probably more global. So much of the tech industry is based on reputation. And if someone is willing to just lie and just basically risk everything, they can get away with it for a while. If they lie to their investors, their customers, their staff, their the media, it will come get back to them.
Hello, everyone, and welcome to Fintech Leaders, coming to you from New York City. I'm your host, Miguel Armaza. I'm a co-founder of Gilgamesh Ventures, a venture capital fund that backs early-stage fintech entrepreneurs in the U.S. and Latin America. If you enjoyed this conversation, I invite you to leave a review on Apple Podcasts or Spotify so more people can learn about fintech leaders. In this episode, I sit down with Alex Konrad, senior editor at Forbes, where he covers venture capital and startups. Alex also edits and curates the famous Midas list and the Forbes 30 Under 30 VC category. He is a central figure in the world of venture capital, tech, and fintech, and I suspect you'll enjoy hearing from what he has to say. We discuss a behind-the-scenes look of the Forbes Midas list and the growing influence of fintech in it, the impact and adoption of AI in the financial industry, evolution and future of the VC industry, the role and influence of media in tech, curating the 30 Under 30, and a lot more. All right, Alex, welcome to Fintech Leaders, and thank you for joining all the way from Brooklyn.
Yeah, I'm happy to chat with you across the East River.
I recorded an episode with someone who was in Asia not long ago, and now I have you both very, very distant locations.
It's too hot for us to travel too much.
There's no way I'm going out today. It's so steamy. So, Alex,
let's make it spicy. Yeah,
please. Before we talk about a lot of the topics that I'm very eager to ask you about, let's hear about your background as a tech reporter. Correct me if I'm wrong, but you did not study journalism or communications, at least in the undergrad. How did you become a tech reporter?
Absolutely. So for better or worse, the university I went to, Harvard, doesn't actually have journalism classes. They think that good reporters are getting real world experience and learning other things. And so that kind of gave me a chance to think in other directions with journalism as an option. I actually wanted to be more of a modern day Indiana Jones, but I realized that in real life, Indiana Jones would be probably locked up in a jail right now. And I actually did get in trouble with authorities once in the Middle East. And that was kind of enough of the scare that I decided archaeology was maybe not the best path for me. And I did gravitate towards writing. So for me, it was working for the newspaper and then doing internships at places like WNYC Radio, which was the New York station for NPR. And then I think most important for me was Fortune magazine, where I interned during undergrad. And then I started a job the Monday after I graduated.
What makes a good tech reporter these days?
Well, there's only me, so everyone should just follow me on social. There's only one. No, I think curiosity is the most important thing. I think you have to find the subject really interesting. That doesn't mean you have to think that everything is amazing or everything is bad, but I think you have to actually enjoy the learning process, because a lot like I think a venture capitalist or people who are meeting with a bunch of different companies, you're often speaking to people who know so much more about one topic than you do, but maybe you know more about 100 topics that are not their top area. And so kind of figuring out how to balance that lighter or shallower understanding of many things to try to understand what's going on with someone who's living an experience for a technology day in, day out, that's the fun and also the challenge. And if you can't really do that, it's really hard to write with authority and give any sort of real point of view to the audience. It's kind of like trying to write in another language and not feeling comfortable.
Yeah, much to my surprise, because I'm in the podcast world and also the VC world, the overlap is quite significant, right? But I also see that good investors, good VCs, they have processes, right? So I assume for you it's the same. You have developed a process that you use to cover a market where there's no slow news day, right? I say that about fintech, but tech is taken to, I don't know, the 10th hour. How do you cover this crazy market?
I think I do try to find focus areas where I do feel a lot more confident that I understand what's going on. I spent a lot of time writing about venture capital, but also more recently AI and AI companies. That's where a lot of the investment is going. So it kind of makes sense. In the past, I co-created our Cloud 100 list when cloud computing was sort of the big area, but a lot of those companies now just are AI companies. So I kind of look for these focus areas. There's some areas that I'm just like, you know what? I'm actually not an expert here. And if I tried to write, I would probably embarrass myself, or at least I wouldn't have that confidence. And so I kind of steer clear of those. For example, my wife is actually a consumer investor. She's spending all day thinking about early stage consumer startups. Not really my area. I learned from her at the dinner table, but it's not something I'm going to be writing about because I wouldn't be able to tell you what makes a great consumer company.
So are we going to be seeing the AI 100 anytime soon?
We actually have an AI list. It's the AI 50. We partner with Sequoia and Meritech on that, and you can go check it out. It's a pretty good list, even though I don't do it.
And given the influence that some of the media organizations can have, not just in tech, but just widely, industry-wide, how do you view the role of media? Because at times it can shape the narrative across many domains in life.
I think at its best, media is driving conversation about topics that people should be paying more attention to. Or if they are paying attention to it, it is better informing them so that they know the real story, not just what people want them to hear. That can be tough. I think sometimes the best articles I write, nobody is fully happy with them. People who feel one way don't feel fully happy, and then their opponents might not feel happy either. Like I just did a cover story on AI policy where I talked about these doomers versus these open source people. And I tried to kind of play it down the middle and explain what this big debate was happening in the tech world and AI. And both sides were kind of not the most happy with me because I wasn't cheerleading either side. And I think that's kind of what media is supposed to do, is inform the audience to be part of the conversation, know why they should care about these things for good and bad. Of course, we get accused of being too positive or too negative based on the moment. I've been in this game now long enough that I've seen kind of both those accusations be popular.
Without naming names, are there any crazy occasions where you've published something and then you've received some sort of phone call, email, or any reactions that you won't forget?
100%. I won't say who it is, but there's a famous entrepreneur whose lawyer basically threatens to sue us before we even write about this person. It's like, whatever you're writing is going to be bad, so I'm going to sue you. And be warned that you're going to be sued. And in a way, that's a little scary. In a way, it makes us kind of confident that, hey, you know what, we should be talking about this person. Because if we at Forbes were scared to talk about them, we don't expect random people, on Twitter or something to talk. They'll be scared by a lawsuit. And so in that moment, it feels like you're doing a good job, but it's also just really not fun. It sucks to be threatened with a lawsuit.
Yeah, I can't even imagine. Alex, let's talk about one of the most visible things that you do at Forbes, and that's the Midas list. Correct me if I'm wrong, but you've been involved for over a decade. Is that right?
Yeah, I have a real appetite for punishment, I guess, Miguel.
So take us to the inside. How do you build it? How many people are involved? How does the process happen? And then we'll talk a little bit about the list that came out 2024.
Absolutely. So yeah, I started working on the Midas list 11 years ago. Most of my Forbes career, I've been working on it, and that's almost half of the time that we've put it out. We started putting it out in 2000. So the list has evolved quite a lot over those 24 years. We skipped 1 year in the financial crisis, so it's actually only 23 lists, but still, pretty long time. And the list is data driven and dispassionate. There's no opinion going in, there's no preferences. I get a lot of people upset that they didn't make the list or they don't feel. I joke to people that the only one person is ever happy with the list, if that, but everyone else is like, I should have been higher ranked. So it can feel a bit thankless, but what we can stand behind is that we use a model and we use data that goes back now over 20 years to try to be as accurate as possible. And we'll put people on who don't like Forbes. We'll put people on who do like Forbes. We'll leave off people who love Forbes. It isn't really one of these qualitative rankings. It's one that is completely based on a model, and that allows us to try to improve the model every year.
One of the factors that is definitely going into the model is the valuations of the companies that these investors have invested in. How do you normalize for some of those insane valuations that we saw in 2021 that today it's hard to take them at face value? At least some of them, many of them are definitely deserved, but others probably are zeros.
It's a constant balance because when you're dealing with something that has this long history, you want to improve it year in, year out without doing too much. If you change too much, you can sort of lose the magic of what you had to begin with. And so I'm sure you have situations like this. As a steward of this list, it's going to outlast me. I'm really only trying to correct it a couple degrees on the direction. I'm not trying to like turn the ship all the way to the left or right. And so in 2021, in the ZERP environment, that was a huge challenge because, as you said, you had these crazy valuations like WeWork and all these other companies. SoftBank's investments were flooding the market. And what we decided to do was really make it clear that we value real exits. So IPOs and acquisitions, they count more than a private valuation. We also added a factor that there's a recency factor to the private valuation. So if you have a 5-year-old valuation, that might get discounted by us because it came from, let's say, a ZERP environment or, a frothy market. Whereas if you're a company that has repriced, like a Klarna or a Stripe or a Figma, that makes us feel better about that private valuation. So we had to be careful about how much they counted and also how fresh they were. And that was not something that I was worrying about when I started working on the list at all.
Now, this is a fintech podcast, so we do have to talk about fintech's influence on the 2024 Midas list, which I was very, very happy to see that 26, I counted, 26 out of 100 REs had at least one fintech notable deal. Mm-hmm. Which is great. And they were global companies, not just US. Nubank was there and a bunch of
Revolut is a big driver in Europe. Yeah, it is global for sure.
Absolutely. Yeah. Tell us about the influence of fintech in the list, I guess, leading up to 2024, but it's been a big influence for years now.
So one way to think about the Midas list is it is a little bit of a lagging indicator in the sense that these investments could have been made a number of years ago. As you know, people joke in venture capital, you can do it 7 or 8 years before you know if you're any good. And the Midas list is like 7 to 12 years later, you actually know you're good. Those are the people on the Midas list. And so some of these investments that were made in the fintech era, especially when we saw a boom in these companies, let's say 6 to 8 years ago, they really matured in a way that has been really good for the Midas list. And so whether it's Revolut or Monzo or Nubank or some of the platforms like a Stripe, checkout.com, for the biggest Midas list investors, these were early investments made a number of years ago that reached that scale that we want to see. And even better with a company like Nubank, liquidity, right? And so I think Nubank is just such an exciting outcome. Obviously, Mickey Malka, great story, born in Venezuela, head of Ribbit Capital, I think one of the best fintech investors in the world. And it put him at number 2 on the list alongside Coinbase and others. But Nubank had a bunch of influence. It also helped Ade Ajao, who was the first Black investor to ever make the Midas list, the head of Base 10 Partners. He was an investor there. He's actually another great story. He's born in Spain, African Spanish heritage, came to America to go to Stanford Business School, was actually at Stanford Business School with 3 LATAM unicorns, And so he got to invest in those companies, realized maybe he was a better investor than founder, built a Midas career. So we got to see some really cool global investors who have seen the opportunity in fintech, especially in LATAM, but in other places too, maybe because they have a different background, maybe because those were just really nascent markets. But I think, that's been one of my favorite things to see is that a lot of those biggest fintech companies were not just Silicon Valley companies.
Yeah, and I guess you see that across other industries as well. Do you see the influence of global companies or non-US companies increasing over time, or has it softened a little bit in the last couple of years?
I actually think a lot of the biggest drivers outside of fintech are based in the US. The biggest private company movers, one is a notable non-US company, ByteDance, which is like its own, we could talk for an hour about the weirdness of should we trust ByteDance's valuation? What does it mean? But of course, some Chinese investors did well there, and actually American investors too. But then you think about Airbnb, you think about Coinbase, you think about Stripe. These are US companies. And so I would actually say, I think fintech and payments are very global and sort of, it's a category where winning in local markets is really important. And so I actually would say that the biggest drivers in fintech were probably more global. Although I haven't read a formal study there, that would be my guess. Whereas SpaceX dominates space investment on the Midas list. It's so much bigger than any other space company.
Very cool. Yeah, I've had, glad to say that I've had quite a few of the list on the podcast. Mickey doesn't do interviews though. Not anymore. So I'll have to.
It's very hard. It's hard for us to talk to Mickey too. And next time I talk to him, I'll tell him to talk to you.
Yeah, no, he's politely declined, but he's definitely a role model for me. Alex, so talking about I guess also about the list, you're starting to see a little bit of an influence of AI companies. Not too much though on the Midas list. Definitely a lot on your coverage. And on the VC industry, it sounds like it has partially overtaken your world.
It really has. I'm working on our Cloud 100 list right now that comes out in early August. It's a list that I created with Bessemer in 2016. And in the years since we've done that, AI has really crept in so that we expect to see more AI companies than ever on that list. Last year, you already had OpenAI high up there, and its revenue seems to be in the billions from all reports. But I expect to see a bunch of other companies do well, whether it's Scale AI or Anthropic or newcomers like Perplexity or Cohere. And so I think these companies are getting meaningful revenue, which is what's important for Cloud 100. And they're also getting insane valuations, and which is, as you know, important for Midas, but not the only thing. We haven't seen huge outcomes in AI, right? We haven't had a huge true AI IPO or huge acquisition. We've seen some smaller acquisitions, and we've seen some weird kind of acqui-hire situations, like Microsoft and Amazon not wanting to fully buy a company. But yeah, I'd say that's why you don't see AI as much on Midas, but you might in the future, because we're waiting for that really big liquidity event in AI. It also depends on what you consider AI. Like if you think of Databricks as an AI company, that's going to be a huge IPO, whenever that is, maybe next year. But it was a cloud company when I was writing about cloud a few years ago. Now it's an AI company.
A good old rebranding.
Exactly.
And is that in your private conversations, is that something that just continuously comes up with investors, with VCs? Do you feel that that's taking a lot of mind share from people?
I had a big debate at a Forbes event in June called Iconoclast, where we had a few New York VCs on stage, the heads of a few firms. And one thing people disagreed on was, should you separate AI investment from sort of total VC activity because it distorts the numbers we're seeing? One argument was, well, if it's the fastest flowing capital area, it should 100% count, just like it could be fintech, it could be crypto, it could be whatever. You always have the fastest growing area. So to separate it out would not make any sense. On the flip side, I do feel like most of the funding rounds that I'm seeing come to my desk because they're big or noteworthy are somehow in the AI ecosystem. Of course, that is some selection bias where, we have an amazing fintech team. Shout out Jeff Coughlin and Emily Mason. You should check out their work. I wrote a scoop with Emily in fintech recently about 0.72 Ventures actually getting out of fintech, which
Yeah,
was,
I
we
saw
can
that.
talk about that. So some of it is selection bias that maybe people know that I read a lot about AI, but I do think that a lot of the buzziest funding rounds happening right now are in that space.
Yeah, I definitely read and saw that article about Point 72. We've co-invested with Point 72 at Gilgamesh Ventures. We really liked the team, the fintech team. And your research, it does seem to be a bit of an isolated decision, or are you seeing that across other funds that had dedicated fintech teams?
So I think it can be two things at once. One is I think it is a real sign of what some generalist funds, especially venture funds attached to hedge funds, they are rotating to AI. That was what we heard. Steve Cohen is like, I want to be doing more AI, less fintech and crypto right now. And there's been reports that he's trying to raise a dedicated hedge fund just for AI as well. So I do think if you're working with people who have fintech as like one branch of a lot of things that they do, I can understand why they see sort of shinier objects somewhere else. And they're like, oh, this is hard. Like, let's come back to fintech in a couple of years. I think that if you're a specialist fintech player, it's still a good category to be in. And I don't see any slowdown among sort of fintech first VC firms, if that makes sense.
Yeah, it does make sense. And it's kind of what we're seeing as well. On the point of AI, it's kind of become table stakes that if you're building a software business specified for fintech, some of your processes are going to be AI enabled, right? And I think you're seeing a spectrum of companies where some, it's a percentage bigger than 50% that is AI enabled. Others, companies being built today in 2024, it's less. The entire process, let's say, to simplify, there are 10 steps, only one or two are AI enabled. And when you're dealing with regulators, I think that's kind of how you have to start. You can't just go full LLM automation for everything. You'll get in trouble.
Although I do think there are multiple interesting startups out there that are basically their whole business right now is trying to hook up banks to LLMs in a safe way, bringing the LLMs on premise, working on data custody, but basically allowing some of these huge financial institutions to do more with LLMs. There's obviously a ton of interest, and we know that the big banks have invested in some of these startups. They've done pilots with them. Some of the more tech savvy, like I'm sure Bridgewater has a crazy AI team and stuff, but I think generally speaking, we're still working to kind of like fully hook up your JP Morgans to do this at full scale. We actually had the CEO of Carlyle at our conference, and he was saying, oh, well, all my analysts are using AI in some capacity. And I totally believe that it could be like productivity or model making or whatever it is. But in terms of AI actually like driving major investment decisions at Carlyle, I feel like we're still in that on-ramping process at scale.
Yeah.
That's my sense, at least.
No, absolutely. I just had lunch today with someone from one of the big banks that you might or might not have mentioned. They can't use any of the big LLM models. They are desperate to unlock at least one to get that enterprise version, right? I mean, for those that do successfully, a lot of money to monetize there.
The one other thing I would say on that front is if there are any entrepreneurs in your audience or people who are looking at these startups, I do think that directionally speaking, some level of AI will just be table stakes, in the next couple of years, where any consumer-facing fintech app will probably be using some sort of AI at some level of its process, whether it's on-ramping or it's finding better rates or whatever it is. Like there will be some sort of AI, but it's not like their whole business depends on AI. And I think that level of AI will just be table stakes, like, oh, having a mobile app or being on the internet. And then I think what we'll consider maybe a real fintech AI company would be a company that's like, we are the best in the market specifically because of our own custom model or whatever we're doing with AI, right? And I don't think we've seen that yet. We've seen companies like Ramp announce AI tools. I'm sure Brex has them too, but it's not like Ramp and Brex are really AI companies in my mind, at least yet.
Yeah, and even Nubank acquired an AI company that's building AI tools for banks. So they're all taking steps for sure. I'm curious, in your career as a reporter, from your point of view, what has changed for VCs with the way you see it? Because the industry has certainly evolved. What are a couple things that stand out that have really changed from when you started to today?
It's just a much more mature market in every way. You could kind of just know 5 or 10 firms as like the best firms 10 years ago, and most people would agree on them. Now I think you really, based on what area you're in, what you would consider the best firms is so different. If you're in defense or you're in crypto or you're in fintech, there's so many smart specialists and also firms that have dedicated funds that I think the game is much more complicated. And I think having your expertise or like being considered the best in a certain area just means something really different now. It's not like you can just go to Sequoia, Benchmark, Excel, Index, whatever, and be like, okay, I'm done. Like those are the best firms. And I think that's also driving people to try to be leaders in different ways. We didn't have VC podcasts like this 10 years ago. If I were an emerging manager like my wife, or maybe you would consider yourself one, I don't know. But like, of course, I would want to be out there talking to my community, showing me what I think about, because founders have a lot of options if they're a hot company and they want to see that you really care about the space, that you know what you're talking about, that you do the homework. And so that's just really different. There was an interesting study done of the Midas list that found that only 7 of the 100 tweet regularly, like close to daily. That's maybe partly because Twitter isn't what it used to be, it's X now. But I think it's also that when those people became top investors, being a public brand on social media was not really as important. I think 20 years from now, most of the top investors on the Midas list would have some sort of podcast or blog series or video series. They'd be out there with their community for sure.
Yeah, yeah. To me, the OG on having some sort of media brand is, of course, Michael Moritz. He used to write, I forget for which one, but a magazine and a newspaper.
Okay. Yeah, and he wrote a book about Steve Jobs. Yeah. And I think he was like telling Sequoia, you should invest in Apple. And then it turned out he was a great investor, maybe the best ever. But yeah, I mean, look, even more recently, Fred Wilson, who's been on the list every year, a New York legend, he had a popular blog. Chris Dixon from the crypto world has blogged and written a ton of essays. I don't think Chris would be considered such a leader in the crypto world if not for his writing and his advocacy.
Yeah. Branding is more important than ever, for sure.
But of course, you have to make good deals eventually too, right? As we said, 7 or 8 years in, they're going to catch up to you, and the LPs are going to want to see some good companies.
Yeah, absolutely. LPs will want to see them before.
Sure. Fair enough. But especially at that point.
Absolutely. Let's talk, speaking of branding, of individual brands. So the 30 under 30, a lot of people love it. A lot of people kind of have a lot of strong opinions against it. You've been running it for a while. How does that process work? I imagine it's very different to the Midas list, but it has similarities.
Yeah, sure. So I run one of our under 30 lists. Unlike some places, Forbes has a bunch of lists by sector. So I run the venture capital list, but we have a finance list where a lot of the fintech folks will go. We have a tech list. We have a list for creators, games, and we find that it's better for these people to at least be judged within their sector. That, of course, has a flip side that there's a lot more than 30 people on the list. And so some people say you have too many people on. Maybe that's true, but at the same time, I think that's more fair than, let's say, trying to compare LeBron James to a politician or something like that. How could you do that? That's one thing. Then I think it's important for people to know that we have industry judges every year. You can see them if you check the website, and they're always leaders in the field. So, for example, in venture capital, I've had Sam Altman, Naval Ravikant, I've had people from Sequoia, Andreessen Horowitz, you name it. And there was actually an interesting moment where Gary Tan, the head of Y Combinator, over the 4th of July, tweeted something kind of snarky about 30 under 30. I think a founder who had it in their bio had said something that he didn't like about YC. And I was like, oh, yeah, I mean, if only we knew how these people were making the under 30 list. And I tweeted kind of, maybe I shouldn't have done this, a photo of Gary as a judge last year, because he's been a judge of 30 under 32. And I have a lot of respect for Gary. I probably should have just not been online during the 4th of July because I had too much free time. Shouldn't have engaged there. But it did frustrate me because I think the reality is you have these really smart judges. We do take it seriously. And we're still, of course, going to get it wrong. But it's because a lot of these people are relatively early in their career, or they're Series A, Series B type founders. As you know, a lot of even Series A and B founders are going to fail. Much more rarely, they may turn out to be bad actors. But I think what that brings up is a bigger point, which is so much of the tech industry is based on reputation. And if someone is willing to just lie and just basically risk everything, they can get away with it for a while. If they lie to their investors, their customers, their staff, their the media, it will come get back to them. But I think if you look at the few people who have kind of been big flameouts from the 30 under 30 list, at the time, the whole industry was supporting them, or at least a lot of people. They raised tens of millions of dollars. There was that one founder who sold her company for over 200 million to JP Morgan. You would expect JP Morgan to be doing more diligence on a sale of that size than we do for a list, right? So I get a little touchy where I just feel like, of course, these are going to be high profile misses, but the list is trying to capture who is getting attention or doing something exciting at that time. And of course, so many leaders have been under 30s. You know, I got to play chess with Magnus Carlsen recently, which was so cool. He's an under 30 alum. Sam Altman's an under 30 alum. Most of the top YC founders like Patrick Collison are under 30 alums, but they don't put that in their bio because they have a lot of other achievements, and I totally respect that. So it's usually just the bad ones who have it in their bio, and then it gives us a headache.
That one founder that sold to JP Morgan, and we know the story. Yeah. She was a guest on the podcast.
Well, there you go. And the thing is, until you're caught, if you tell an amazing story and you're willing to just like completely make it up, it'll take a while for it to catch up to you, and it will catch up to you. But I think like that's one thing that people forget is at the end of the day, our judges and us, we're evaluating the same stuff that everyone else is. We're not able to like verify bank statements more than JP Morgan could. But if you've raised a lot of money, if you have real customers, if you have a great story, that's what we want. We want under 30 to be an inclusive community, especially if we can elevate people who are not in Silicon Valley or New York, but kind of unusual backgrounds, building something cool. And then I also laugh because we get criticized that the tech media is not positive enough, that we're too negative or we're trying to tear people down. Under 30 is trying to celebrate people who are kind of early or mid-career who look exciting and cool. And of course, they're not all going to succeed. So are we too positive to be talking about them? Sometimes it feels like you can't win, which again, it's the job we sign up for. So
hey, and also the reality is that any community that has a bunch of type A competitive people, even in competitive schools, I went to Wharton for my MBA, and every year out of every class, unfortunately, there's some big fuck ups. I was like, they did what? Like, what was the reaction that you got to the 30 under 30 Hall of Shame?
I actually was urging us to do this for years. And my wife used to work at Forbes before she became an early startup employee and now a VC herself. And so even back when she was at Forbes working on 30 under 30, when we first met, we both felt like we should lean into this. You have to embrace the meme. You can't fight it. You have to own the stuff. So I was actually really excited when we finally did it. I was like, let's lean into this. And I think the reaction was mostly positive. People were like, Forbes is acknowledging this, SBF, etc. Like, we all know these stories. It's good to own it. They're having fun with it. And so I was really glad we did it. I think the biggest criticism we got was that not all the people in the Hall of Fame had done the same level of bad things. And I think that is a fair point. They're not all criminals. They're not all going to jail or in jail like SBF. And so is it unfair to just put a founder who flamed out next to SBF? Like, probably. But that's also a limit to us at least trying to do something like that. So I think everyone, hopefully people didn't take it too seriously, and they understood that it was Forbes saying, yeah, we've had some huge flameouts too, and we're going to be open about it. We're not going to try to like sweep them under the rug or anything.
I'm interested because you have a bird's eye view of the whole industry. If you had to make a bold prediction on where this is going, where we'll be in like 5 to 10 years, what do you think are going to be some meaningful changes?
I think that we are going to see a whole different wave of startups that are basically being able to get to real scale while tiny. I think this is like when I was writing about the rise of AWS, and it was like, wow, it's so much cheaper to start a company with AWS. All these coding co-pilots, everything we're seeing, it's still relatively chaotic, like which is the best. But I think in 5 years, it'll be pretty easy for one of your people who follow you at Wharton or whatever to spin up a prototype. They can use design software, AI to like prototype a visual. They can get the code done. And so I think it'll push good ideas to matter even more. It's like if either of us could just spin up an app like in an afternoon, it's got to be a good idea, right? It can't just the app existing will be devalued. And I think you're going to see a real bifurcation where a lot of companies struggle because they looked cool, but they didn't have a great idea. And then you're going to see also some companies really take off because they were different. And then I think the real question, and where I don't envy you as an investor, will be who has lasting power in that world? Like if you could whip up a beautiful new consumer fintech app really fast, then I guess it's about the banking relationships and other things that take time that create a competitive moat. But it might be relatively easy to like copycat each other for consumer facing products. So I can see that going both ways. I hope it's good for the consumer. I hope at the end of the day, consumers will have way more options, way better experiences, more personalized experiences. I'm curious, are you optimistic about kind of where that goes?
I think, yes. I think it's not going to be as extreme as what some people have been saying. There's going to be the one-person billion-dollar company. That's not going to happen, I think. But we are seeing already deflationary effects of AI even in large publicly traded companies that are very tech forward. Going back to Nubank, that's one. Even Kaspi is a publicly traded company from Kazakhstan. I recently had the CEO on the podcast. They have not increased headcount in the last 3 to 4 years, but they quadrupled in market cap, in revenue, and a lot of that is driven by AI. I mean, customer service is they have the same number of people, but they're serving more consumers, right? So yeah, I mean, absolutely, it's trending in that direction. Nothing is going to be extreme. You're still going to need the best ones, high hundreds of employees, and like average great companies probably in the thousands. But I doubt we're going to see huge companies get to hundreds of thousands again, like many of the legacy ones.
I do think a lot of this ecosystem is cyclical, where also, we will see a big IPO rush. We'll probably see a boom time. It'll be very hard to resist kind of ZERP activity again. And then there will probably be a tightening of the belts again. If you look at the tech industry over the last 20 years, you do have this kind of trend line of these new technologies, whether it was cloud or mobile on the one hand, and then you also have these kind of booms and busts in the investment cycle. So in that area, I feel like if we checked in a year from now or 3 years from now, it really depends where we are on that cycle, but it could kind of have gone either way at that point. I think one of the biggest things I'm really curious about is our work culture going to change a lot? That could be different. If we spoke in 5 years, is the idea of a long workday meaning that you did a good job? Will that still be true? It's possible that efficiency will be evaluated differently because there are such better tools that we could be using, right? So it's like, it actually could be a bad thing if you spent 10 hours working on something because it means you didn't know how to do it using tech. So
yeah, I hope so. Alex, before I let you go, any favorite reporters outside of the Forbes world that you have?
Well, Matt Levine is always funny to read. I love his it's a little more opinion-y. He's a breath of fresh air, especially when there's a big story, whether it's WeWork or, SPF or something. He's always really fun. We just lost one of my favorite colleagues, Kenrick Kai, who is my favorite AI reporter. He's going to be at one of the big other publications, I think probably by the time our audience is hearing this, so go check him out. He's great. And I really like the podcast series at Bloomberg that Ellen Hewitt is doing. She has one about Sam Altman right now that's really interesting. But I'm a big fan of kind of narrative podcasts and kind of getting to go deep on a story. So there are a few of those out there. And I would say interview pods like this are awesome. It's great to kind of have that free flowing conversation. But sometimes I like to, kind of settle in with a story. And so I like the narratives too.
Yeah, I think for me, the gold standard in that narrative is Acquired. They really do their...
Oh, yeah. I mean, they're not journalists, but they're great. If you ask me non-journalists, they'd be top of my list too.
Yeah, very cool. Alex, thanks again. Fascinating stuff. We're going to continue following all your stories, your breaking news, and I'm glad that fintech is still an important part of your world, and I have no doubt it's going to continue to be.
Yeah, I'm very confident that it will be as important moving forward, if not more. And so I look forward to catching up again, down the road.
Awesome. Thank you, Alex.
Thank you.
Thanks for tuning in. I hope you enjoyed this great episode with Alex Konrad from Forbes. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, or wherever you get your shows. It helps and means a lot. And if you have any suggestions or thoughts about the show, just drop me a line on Twitter or LinkedIn. Signing off till next week, I'm your host, Miguel Armaza. The Fintech Leaders podcast is for informational purposes only and should not be considered financial or investment advice.